Welcome everyone, and welcome to 2022, and this year's first monthly brown bag discussion. My name is Marc-Andre Pigeon. I am the director of the Canadian Centre for the Study of Co-operatives. And before we begin today's conversation, I want to note that it was minus 38 this morning in Saskatoon without the wind. And whenever I experience these cold temperatures, I can't help but think of the Indigenous peoples who managed to survive and thrive on these lands without our modern day creature comforts. So in this Treaty 6 area of Canada, I think in particular of the Cree, the Dene, Blackfoot, Saulteaux, Nakota, Sioux, and the Métis Nation. I think from them we can learn to be grateful for this land, the water, the skies, and even the cold that is part of our national identity. I think we also need to, in kind of doing this recognition, I think we also need to recognize that the importance of being good stewards of this land, good ancestors to all our children by being good neighbors to one another. And in some sense, that's what David's talked about today, is this idea of provinces as neighbors, and can we think creatively about that from a credit union perspective. Before we launch into things, a word on our brown bag series. While this series of talks every Wednesday, the first Wednesday of every month, is structured around a conversation with an invited guest, it's at least as much about creating space for informal conversations, because these conversations, these informal networks, are the tissue that stitch the sector, cooperatives, and credit unions together. And so that's our purpose with these brown bag conversations: to have interesting conversations, but also create these opportunities for informal connections. So a bit about David before we get him to start talking. I think a lot of you will know David. He's been around the credit union sector for many years. He's currently an independent consultant and a corporate director who's previously worked as an executive vice president and chief financial officer for UNI Financial Corporation. In that role, and I think this is important for today's talk, David led their transition to becoming the first ever federally regulated credit union under the Bank Act. Now, David also is still very active in the credit union space. He serves on the board of UNI Financial, Concentra Bank, and also on Vestor Corp. This is a bit outside of the cooperative sector, but it's a nonprofit organization that provides pension investment and administrative services in the New Brunswick public sector. While there's much more we could say about David and his background, I'll only add one more thing, and that is that I had the great pleasure of working with David for a brief period at the Canadian Credit Union Association, and in that period of time, I got to appreciate his keen intellect and his deep interest in public policy matters. So that's kind of what's got us here today a little bit. Last thing before I hand it off to David, we're going to have about 20 minutes from David. Then there's going to be a short conversation with myself, and then we're going to do our breakouts, and then we'll resume, and then we'll conclude. So David, over to you. Kick us off, please.
All right. Thank you, Marc-Andre. This is a great start. I'm always a little bit nervous when I start presentations, but I've already recognized a lot of names and a lot of faces there in the gang. So thank you all for being there and for participating in this talk. I think it's a subject that I had thought about quite a bit over the last few years and finally had a chance to put it to paper. And so I took some notes. I'm going to go through my notes because we're trying to keep this to 20 minutes. I want to make sure I'm able to get this through this and give you guys all the opportunity to discuss it. So thank you very much, Marc-Andre and Stan in particular, for this opportunity to discuss the paper. The left-hand side of this slide reflects yours truly, according to some of my friends and family. I actually started my career as a tax guy, and so very used to reading through thousands of pages of meticulous detail on how things are supposed to work, and so that's part of the experience that I carry forward. I was a tax guy actually for about 5 years until 1995. But for more than 20 years now, as Marc-Andre was mentioning, I've been in the credit union system. So living and working in Caraquet, a small town in northern New Brunswick, a cultural capital of Canada that thrives on the fishing industry and tourism. We are in the traditional unceded territory of the Malasite and Mi'kmaq people. As Marc-Andre was mentioning, from my home base here in Caracat, I was the CFO of a credit union central, which later merged with the 15 Francophone credit unions in New Brunswick. And because of the systemic risk that was created by that amalgamation, we transferred over to federal oversight, becoming the first ever federal credit union in Canada in 2016. Part of my work there for 19 years, I was the general manager of a cooperatively owned life insurance company, and also the general manager of an investment mutual fund dealer. And as the general manager there, I also was elected to the board of directors of the Mutual Fund Dealers Association. And I'm just saying that because it gives me some of the background of where some of my thinking behind the passport system came from. As a consultant and director, I spent some time at CCUA, as Marc-Andre mentioned, as the CFO, and I've also been a director of Concentra Bank, as he mentioned, for the past 5 years. I've worked with other credit unions and system partners over the last little while too, and I think all of that kind of led me to the thinking that's behind this paper I wrote, and that was published by the C.D. Howe Institute in November of 2021. So my knowledge and experience is what I put into this paper. It was a few years in the making. I really wanted to thank the C.D. Howe Institute for sticking with me, as it was frequently bumped off my front burner. But they have a very rigorous process, and I think the work they put into it and other readers and reviewers made it a much better paper. And so I appreciate a lot of people who are mentioned in the paper as contributors. The C.D. Howe, I wanted to publish it with the C.D. Howe to give it that extra weight with regulators and finance officials. C.D. Howe's reputation is such that the opinions and the commentaries they publish are thoughtfully considered by all levels of government. And really, I shared with the C.D. Howe their feeling that this was an important policy piece, important discussions to be had, and felt that this paper had the potential of having an impact on credit union regulation going forward. So when Marc-Andre asked me to present an overview of this paper to this forum, I was very grateful for that. I'm thinking most of the participants, especially those that I recognize on the call, are familiar with the paper, and so I will be walking through it fairly quickly. I have included towards the end some potential questions to ponder and what might be some next steps in the questions to ponder. I think with the format of this session, we will probably be picking one of those questions for some breakout sessions at the end, but there's some other ideas of questions there. And I invite any of the participants. I had my email address at the opening of this. I'd invite any participants to please do reach out to me with any commentary, feedback, help, advice you might have. It will all be graciously received, and I've had a lot of it thus far, and it's all very helpful. And I think that's probably the most important part of all this, is getting some discussion, some conversations going, and seeing where that might lead us. The paper starts by presenting a picture of the credit union industry through several different slides. This is one slide that I thought that I would put forward that talks about, the scope and scale of the credit union system in Canada. I think this is no surprise to most people on this call. You understand that collectively, credit unions have a very big role in the Canadian economy. We show them here at 15% market share of lending. That would place them third on the list. If you had them as one entity on the list, comparing them to banks, they would be, third on that list in terms of a provider of lending to the Canadian economy. So they're a very significant player. I also had in my paper a slide on the market share for small and medium enterprises, for SME lending, and here again, you can see that these market shares are even higher than the 15% we showed earlier, again showing the importance that credit unions are playing in the economy, especially for these small and medium businesses. And a lot of this is tied to the fact, and I talk about this in the paper, although I don't have the statistic here, that there's hundreds of credit union branches in areas that are not served by any other financial institution. I think that's, so when we think about the role credit unions are playing, they are critically important to Canada's economy. Everybody understands that our big banks are operating in somewhat of an oligopoly, and they coordinate a lot of their policies and practices, whether it be directly or indirectly, and really second-tier financial service providers are critically important to the Canadian economy. And when you look at these statistics, we really show how that role, when we look at a national basis, that role is being played by credit unions. There's other players. There's Laurentian Bank in Quebec, and there's ATB in Alberta. There's Equitable Bank as a virtual online bank. There's different recipes out there, but really providing coast-to-coast branch services for Canadians, credit unions are leading the way. I also felt it was important to dispel the notion throughout the paper. I thought it was important to dispel the notion that only the federal government is competent to regulate financial institutions. So Canada, we all understand, has a great international reputation for the strength of our financial sector. And financial sector reform, every time we talk about that, we talk about three important outcomes. So we usually frame it around three important outcomes: the stability, the efficiency, and utility. So my paper kind of pulled out those three outcomes and kind of based the study or the analysis on those outcomes. On all three metrics, credit unions are doing very well. There is nothing there to indicate that provincial regulation has not been effective. Credit unions are stable, they're strong, they're efficient, and they're providing important services to Canadians. Although of course, there's always opportunities for improvement. My mother always said, "Don't throw the baby out with the bathwater," and I think that's one of the pillars of my paper, is not to throw the baby out with the bathwater. Having said that, the financial industry is changing very quickly. We can think about the digital transition that already started 3 or 4 years ago. Many credit unions were talking about this. Central One and Solero were talking about this. New partnerships are being signed up. A lot of investments are being made. But when we think about what's coming down the pipe, and we think about COVID-19, we think about open banking, we think about payments modernization, this is changing a lot faster than it was before. And I think, and when you think about the investment that your credit unions have had to put into the digital and technology today, you're also thinking about how much you're going to have to continue to put into it in the years to come. So some of the questions: although most credit unions have plans to provide digital solutions to their members, people have been talking about it for a long time and have been investing in it for a long time, there's still questions on whether they have the ability to attract and retain the people talent to make the best use of that technology, and do they have the efficiency ratios, the margins that are going to be required to compete in these next 3 to 5 years. When we think about the banks with their efficiency ratios around 50%, they can swallow a reduction in prices of 25 or 30%. Can our credit unions do the same? Those are some of the questions that, and I think we're going to have to. When you think about the impact that Uber had for the taxi industry, or that Expedia had in the travel industry, or Facebook had on newspapers and media, it's all about a reduction. It's about grabbing market share, but it's also about reducing prices significantly too. Advertising revenues melted, and commissions on travels disappeared, and that's what, when we think about the future, the digital future of the financial sector, There's huge margins in cards, there's margins in mutual funds, there's margins on fees and services, and a lot of those margins are going to be attacked by new players. And so that's one of the questions that's front and center of credit unions' mind. Credit union leaders need to think about that and are thinking about that. So for many credit unions, scale remains a key enabler to face these challenges. To face these challenges, to retain talent, to keep up with regulatory changes, to improve efficiency ratios, scale remains a key enabler. And so many credit unions are thinking about either mergers or collaboration, because I mean, they're both means to increase scale. Although thus far collaboration, or I should say thus far mergers have been more successful in providing permanent benefits. We've had some success on collaboration as a system, but we've had some setbacks as well, whereas mergers usually keep us going in that same direction. My paper also looked at various metrics on the system, but while we were on the topic of scale, I did put a few pieces of data in this small deck. One is and really here I'm looking at the last 8 years, but in my notes here I speak, and in my paper I spoke that since 1985, the average credit union assets in 1985 were $12.5 million, or roughly $28 million in today's dollars. So if we think the average credit union in 1985 had $28 million in current prices, today the average credit union is not 28 million, it's $1.1 billion. So this is not the same industry as 1985. And I suggest that the way it has been regulated over the past 35 years has got to change as well. And then thus my suggestion that there needs to be a better way. In Canada, each province has developed their own set of regulations and directives for their credit unions. Each province is responsible for the stability, the efficiency, and utility of their system. By adding federal legislation to the mix, we now have 11 silos of credit union regulation. And those silos are affecting the system's ability to further harness scale. The fact that we have 11 different legislative frameworks is affecting mergers, it's affecting consolidation of centrals, and all other collaboration. One of the questions most reviewers have asked me so far, this question has come up many times, is why not just federal credit unions for all? Other than my mother's advice from earlier, which is don't throw the baby out with the bathwater, I also note that federal credit union legislation was never meant as a system-wide solution. That was never the intention. This paper was reviewed by a former finance official, high-placed OSFI official, I should say, and he confirmed that and restated that this federal credit union legislation was never meant and is not meant for the regulation of the entire system from coast to coast. It was meant for those credit unions that reach a scale that they create systemic risk within the province and that the province is not comfortable dealing with. And so I think that's the other important, very important piece to that question of whether or not federal credit unions for all is a solution. It just doesn't fit most credit unions, that federal legislation. And my paper actually goes into many details why. Some of them are noted on this slide, but my paper has a lot more detail on that as well. So again, I think there has to be a better way. 11 regulatory silos for the continued growth of the system in a globalized world. You know, we're going to be competing against giants of Apple and Google and Amazon, and to do it through 11 different silos just doesn't make sense anymore. It might have made sense when each province had 150 credit unions to regulate, and that the average size of those credit unions were $12.5 million. It might have made sense then. And certainly I can understand how it came about that way, where, you know, credit unions existed before the regulations did. And so, you know, provinces were scrambling, and through the Constitution, this was a provincial responsibility. So that's where it went. But it isn't who we are anymore. It doesn't reflect the way the system has grown, and it doesn't reflect the system, in my view, that we need to be able to efficiently grow the importance and the scale of the system going forward. So from my experience on the board of directors of the Mutual Fund Dealers Association, I knew of examples out there of how it could be different. And that's what I wanted to bring forward in the paper. So the first one was within the securities industry in Canada. So, you know, let's face it, the securities in Canada is run by big banks and big life insurance companies. They're the dominant players in the Canadian capital markets. And although the securities industry is provincially regulated, industry participants can operate from coast to coast following a harmonized set of rules. And prior to passporting, because it's only been 20 years of passporting, industry players could still set up shop in multiple provinces as long as they followed the rules in place in each province. So really with the passport system that they put in place, and it's also important to note that passport system was put in place before the harmonized regulations. The harmonized rules came into play 4, 5, 6 years after the passporting system was there. So there's some important precedents there that I think are important to consider. And while I was working on this paper, I also read about the passporting system in the European banking system, and I thought that would be important to pull that experience into the paper as well. Many commentators mention that it's perhaps not a good example because of all the challenges going on in the Eurozone today with Brexit and all that. But the European Banking Authority isn't about to go away. There was also comments that there's been challenges, you know, with the Greek financial crisis and banks in Iceland, the failure of some very, very big banks in Iceland. But I think these are just very important lessons to be learned. And right off the bat, when you think of the scope and scale of passporting banks throughout Europe, where the size and the impact on the economies are, you know, 20-fold what we're talking about in regards to the credit union system in Canada. There's some good examples there, but once again, I think that the picture here in Canada has to be looked at through a different lens. So in Europe, the other thing that was interesting is that, you know, their passporting started in 1993, which was before the euro currency was even developed. Just think about the solvency and currency risks that were there in 1993 that don't really come into play in Canada. The other thing that's very interesting is the first step in their process, like in the securities industry, was the passporting itself, was allowing the merging between provinces, between countries. The harmonization of the rules came much later. So I think, again, we have to learn from that. There's still a lot of work left to be done in Europe. They haven't harmonized everything yet, despite the fact that this has been going on for very near 30 years. But again, I think it's an important lesson on how this can be rolled out in Canada. I'd also note that so when we think about how it would be applied in Canada, what would it mean? Earlier, I made the case that there needs to be a better way than 11 silos in the credit union system. I believe the obvious choice is a passport system. This would allow credit unions to merge between provinces. Mergers would need to be approved by the home province of that new credit union, and deposit insurance would also be provided by that home province as well. And it's also important to note that the legislation that's currently in place in Ontario and a few other provinces, and I think a couple of them are Manitoba and Nova Scotia, if I remember correctly, already provide a framework for that. So it's already provided in their legislation that extra provincial credit unions come and operate in their province, provided the governments have an agreement in place. So a reciprocal agreement between provinces is required, and of course there's a lot of work to get that done. But it has already been conceived of in legislation. How is this better? Well, first off, I like to remind everybody too, when I'm talking about this topic, is we're all in this together. Credit unions exist to serve members. They're open to everyone. Credit unions, therefore, have a very public purpose, same as governments and regulators. So governments want credit unions to succeed, and the public wants credit unions to succeed in this well. So we're all in this together. We have common interests, and by increasing the credit union's ability, the credit union industry's ability to harness scale through mergers and collaboration, we will be enhancing the system's ability to compete within the new digital financial services sector. Greater efficiency, stronger brands, easier collaboration, consolidation of the second tier, all greatly enhanced by a passport system. For the regulator, it means better risk management. It means enhanced competition to the banks and a stronger second tier. How do we get there? Remember, in Europe and in the securities industry, they didn't start with harmonized rules. They started with the passport, albeit with some minimum criteria in regards to perhaps capital liquidity and that sort of thing. So some minimum criteria, and although a lot of stakeholders in this, when you start thinking about this from 100 feet up, you might be thinking, well, shouldn't we be starting with the harmonized rules themselves and working on that? And although there can be some compelling arguments why you might want to start with the regulations, I would warn strongly against that. I think applying wholesale changes to regulations and guidelines across the industry as a prerequisite would suffocate this before it even started. And if we think about how it was done in Europe and in the securities industry, that's just not the way they went. The credit union Caisse Populaire movement in Canada is already managing $600 billion in assets and deposits, and we're doing it well. There's no added, we're not adding risk to the system by thinking about a passporting system. We're not adding another $600 billion in credit risk there. What we're doing is we're providing a framework that'll give opportunities for greater diversification. We're thinking about putting protocols in place that will allow regulators to share and collaborate and enhance their ability to oversee the system. That's where we should start from. We have to start with the idea that this is not net new risk. This is just a reorganization of the risk that's there, and being able to enhance the already very robust and very successful risk management that's already taking place in the system. So my suggestion really, my suggestion is more of sorry, I wanted to make sure I was on my time and I clicked my button too quickly. So my suggestion is really that this has to be a bottom-up approach and not a top-down approach. This can't be a regulator-driven, policy harmonization project. This has to be a harnessing scale and mitigating and managing risk while providing greater benefits for our members type project. So it has to come from the members to the credit union. And so I think that any credit union that has that vision, that they believe that increased scale is going to be important, and they're looking at the possibility of merging with another credit union as being one of the ways of gaining that scale, I would suggest that they should discuss this possibility with their regulator. As soon as any individual one credit union thinks that scale and merger is an inorganic growth, mergers is part of the recipe, might be part of the recipe for them, I think that this should be something that's discussed with the regulator. It is going to take a tremendous leadership from both sides to get this to happen. That was another consensus point that was raised by different stakeholders. And trailblazers will be required to get a project of this type in the open. But I really think it's something that can, and I actually think it's something that will happen. It's a matter of time, and it's a matter of how quickly some credit unions may want to step up and push the envelope on this. Like I said earlier, in some provinces, regulatory changes are required, but a few of them, the framework is already there in place, provided there's that reciprocal agreement. And once that framework is in place, I think that the whole system, the whole industry will be in a better spot to move forward than they are today. So that's the concept. To summarize, this is how, you know, kind of like how my presentation rolled out. I think it's important for everybody to recognize and remember this is not just a presentation that I would target towards credit unions, but towards all stakeholders. Credit unions are critically important to the Canadian economy. Scale is more important than ever when we think about the changes in the globalization that's taking place. We need to get rid of provincial silos. It just doesn't make sense to have 11 sets of credit unions in the Canadian economy. The federal credit union regulation is an insufficient response, in my view. Passporting would be a much better way. Of course, change is difficult, and credit unions could lose something to harmonized regulations. I have heard that in some of the exchanges I've had. You know, we have this certain benefit written into our regulation that isn't there elsewhere. I think that is very important to think about. It's very important to consider. It's very important to that we get all those out in the open and documented. But I would remind everybody that we are in this together. You know, I've done a lot of government. I have met with a lot of government officials and stakeholders over the past 10 years, 15 years, and I haven't met anybody from the regulator side showing any disrespect for what we're doing. Credit unions are highly regarded throughout the spectrum of stakeholders we have. We're providing an essential public service. We're all in this together to make sure that the system can continue to thrive and compete in a global environment. And the final point in summary was that strong leadership from chairs, boards, and CEOs is going to be required, as well as strong leadership from a political and regulatory perspective. So that's the presentation, Marc-Andre. My next slide just kind of opens it up for any preliminary questions you might have for clarifying any parts of the report or for getting stuff going. And then I have a slide with some potential questions for discussion later.
Hey, great. Thank you, David. So the way we're going to proceed is I'm going to ask you one question. I had a half a dozen that we could have worked through, but just in the same name of time, I'm going to ask you one question. Then we're going to break out for 15 minutes, and we're going to center that conversation around a question that Stan's going to put in the chat. And that question basically is asking people to think about what are we afraid? What is the concern about harmonization? What is the concern amongst the credit union sector, maybe the policymakers as well? And how could that risk be mitigated? But we'll come back to that. We'll put that in the chat, and we'll make that the focal point for the breakout conversation. For now, David, I have a question. I guess this is the top of mind question, and that is. So first of all, I love the paper, and secondly, it reminded me of a paper that we did at CCUA or CUCC back in 2011 or 12 on precisely this topic. As the federal credit union legislation was kind of entering into the space and the regulations were being constructed, there was a parallel process to push this idea of interprovincial mergers or reciprocity agreements, which, as I recall, were anchored in almost all the legislation. So that part of the thing is probably solved. In fact, the Credit Union Act in Saskatchewan, pretty sure, has something like that already. So the question is why? I guess the question I have is why do you think it's going to work this time? Well, you know, that conversation happened 10 years ago, and it didn't go anywhere. What's different now that might give this some legs? And then the last, and related to that, I just point out the European Union project was a deeply political project. It came out of the failure of World War II, and the inability of those countries to get along led to conflict, right? And so there was this huge generational push that we can't live this again, and that broke down a lot of the barriers between the states. Do we have something like that at the provincial political level that would motivate the provinces to look beyond their parochial interests to something bigger? I guess, so those are two related questions. What's different now? And on the political side, do you see the political will? Again, I don't think this is quite like Europe. We haven't had a war to motivate people. What is it that's going to drive the political side of this as well? So those are my two questions.
Yeah, great questions, Marc-Andre. I think 10 years ago, I mean, one of the experiences I remember, and I'm sorry, I don't remember that paper from CUCC, and so I didn't use it in my process here. But I did have conversations with regulators that talked about a project that was underway in Ontario to see about the possibility of having a reciprocal agreement with Quebec. At the time, I think it was specifically related to Desjardins' ability to oversee the Caisse Populaires there. And in that context there, I would wholeheartedly agree with Ontario credit unions that what's in it for them? And there was nothing in it for them. They weren't about to merge with any Quebec credit unions because there are no Quebec credit unions. There's only Desjardins, and Desjardins has their through regulation and bylaws, Desjardins credit union could not join up with Meridian or Alternate or anybody else. So there was only benefit in one direction on that, and so I believe that's where that project failed. And so I don't know if that was the context when CUCC wrote their paper on that, but that's one of the experiences that I heard. So I think very certainly there needs to be an incentive and a desire for this to work, and with benefit going both ways, or else you're just not going to get the championing you need to get it done. And one of the other part of the question on the political will, I completely agree. I mean, I saw Camille's face on the phone here somewhere, and Camille Thériault, the CEO of UNI back in the day, used to always say, you need a crisis to get things to happen. And in the case, so your example of the political will to get the euro underway was certainly a crisis that everybody could get aligned to. I think part of the crisis that we're going through right now is related to the open banking. When we think of these new open banking regulations that are coming into play, new global players are going to be coming into the fray. The banks are ready. They've participated actively in the drafting of these new regulations and the new bylaws. Provincial regulators aren't ready. They don't know how they're going to tackle this. They don't know. And so I think there's some commonality there in challenges that all the different jurisdictions are facing, and you may as well face them together. The other example I'd give is all the money laundering stuff. All the work we did on money laundering, that was one federal regulation that was applied to credit unions and the banks at the same time. And I think that's a much better way to introduce changes than having 11 credit unions, 11 silos, I should say, 11 provinces, 11 jurisdictions, all trying to tackle these problems independently. So example on the open banking, I think it's a better strategy to have 11 jurisdictions think about open banking regulation in the credit union system than having one set of rules instead of the 11. So I think that's part of where it comes from. But again, I think the reasons and that political will is going to come more from a bottom-up approach. I'm thinking that a few credit unions are going to say, no, we need this, and we're going to challenge our provincial authorities to get this into place.
Fantastic. Thank you, David. So look, I could chat with you all day, but I'm going to make sure we have some breakout conversations now. So David shared with us a really, I think, a neat idea, and we want to hear from you. And our brown bags, as I said a moment ago, are meant to be opportunities for people to socialize a bit, get to know each other, and develop those informal relationships that could lead to the kind of advocacy that David's talking about, right? So we're going to break you out into groups of 4. And we're going to ask you, if you don't know the people in your group, introduce yourselves. Who are you? Where are you from? Who do you work for? What's your interest in this issue? And then we're going to ask you to think about the question that we've just posted in the chat, which is, what are the concerns around harmonization of regulations, and how could that risk be mitigated in the context of David's talk? So that's, if you have time, think about that question. And then we're going to regroup. So we'll break out for about 12 minutes. We'll regroup and we'll conclude. So there you go. Stan, shunt us away.